They said that it was my war, and they were absolutely right. This is Professor Mark's weekly newsletter for the Stock Market Jobber Report.
Thank you, President Polk. We're glad to have you as a guest this week. You're one of those presidents that no one really remembers, but you actually did a lot of, even though you were controversial, you did a lot of good things for our country. And we're going to explore that a little bit more as we go on. But now I want to talk about market principles. And you know what, Mr. Polk, the same things applied back in your day as apply now, because when we look at these market charts or these principles, it's a reflection of human psychology, and humans haven't changed. The names are different, the companies are different, the people are different, but human psychology has not changed. So let's remember certain price levels are more important than others. Sometimes we know why, sometimes we don't. But the important thing to know is that when something gets to an important price level, there's a chance to make money. And that's because when things get to important price levels, they tend to make big moves. They either reverse or they break through. It's pretty rare that something that gets to an important price level will just hang out there for an extended period of time. They're like forks in the road. The market's going to go one way or the other. So these levels are called support and resistance levels. Now, at support levels, there's more demand than supply. When a market's going lower, it's because there's not enough demand or buyers to take in all the sell orders or supply. So the sellers are forced to offer their shares out at a discount, and this forms a downtrend. When we get to a support level, the tide turns. All of a sudden, the buyers come out of the woodwork, and there is more than enough demand to absorb all the supply. So that's why things or markets tend to stop going down when they get, well, they stop going down and reverse, or they at least pause when they get to a support level. Now, resistance level is the exact opposite. At a resistance level, there's more supply than demand. If a market is trending higher, it's because there's not enough supply or sell orders to fill all of the demand or buy orders. So buyers are forced to pay a premium, and this creates an uptrend. Now, levels that were support can become resistance because of buyer's remorse. People buy, the price goes higher, they think they did a great job, but then the market comes all the way back and the price goes lower. And a lot of these investors experience buyer's remorse and they tell themselves, I made a mistake. I shouldn't have done this. I'm going to get out, but I'm only going to get out if I can get out at break even. So they put their sell order at the same level that they bought it at. So if there's enough of these remorseful buyers who bought at support trying to sell when the price gets back to it, it can turn into a resistance level. So buyer's remorse can convert support into resistance. Levels that were resistance can become support for the opposite reason. It's seller's remorse. Investors who sold at the resistance get regret doing so when the price moves higher, and a lot of them tell themselves that they're going to buy their shares back, but they're only going to do it if they can get them for the same price they sold them at. So you have a lot of remorseful sellers placing their buy orders at the level that was resistance. If there's enough of them, the level that was resistance can convert into support. So this is really important to understand if you want to be a successful trader. And these important price levels, they can stay intact for a long time. A support level can stay intact for a long time. A resistance level can stay intact for a long time. We can get that conversion process going back and forth for a long time, probably more longer than you would think. Sometimes market memory can last months, sometimes it can even last for years. All right, so let's take a look at what the market's doing this week. We got some important inflation data. Of course, we got this craziness in the banking sector, so it should be a pretty interesting week coming up here. So here's the S&P 500. We've been talking about this for a while, this 390 level. So we're below it. We'll see if we get back above it. If we don't, I suspect the market's going to continue to trend lower because this is an important level. And if we get above it, maybe we get a bump to the upside. But frankly, with the way interest rates are moving higher, maybe here's probably what's going to happen. There's probably going to be a flight to safety. People are afraid of the whole banking thing, so they're going to start buying bonds, and it's going to get kind of nuts. And that's going to force interest rates down. And stock people will think, oh, this is great. This is bullish for the market. So they're going to buy stocks. But when this flight to safety ends, there's a good chance those bond prices come right back and the interest rates move right up higher. Now, 390 was support here, resistance here, support here, resistance here, support here. This is what I talked about. Buyer's remorse can turn support into resistance. People who bought here regret their decision when the price goes lower. They tell themselves, I'm going to get out if I can and break even. So they place their sell orders at the same level they bought at. Here's the opposite. Resistance can become support. Seller's remorse. Investors who sold here regret doing so when the price goes higher. They tell themselves they're going to buy their shares back, but only if they can get them for the same price they sold at. So if you have enough remorseful sellers placing buy orders at the level that was resistance, it converts into support. So you don't need to be a market guru or a trading genius or whatever, a super secret ninja power warrior, whatever you want to call it, to look and see that this 390 level is really important. And this may seem kind of simple and you may take it for granted, but as someone who has traded for a long time in the institutional world, I will tell you this, the best traders, they're just focused on where these levels are. They don't overthink it. They don't spend weeks trying to put a thesis together like, oh, the S&P earnings are too low or too high or blah, blah, blah. They just look at the market and they react to it. The best traders let the market tell them what to do. They come to work every day agnostic and they see what's going on and they react accordingly. If you go into trade and you got a preconceived notion in your head, there's a good chance you're going to lose money. Now, here's our technology sector. This is the biggest sector in the market. And as we can see, we see some of these dynamics. Resistance became support, right? People sold and they regretted doing so when the price went higher. So they placed their buy orders at the same level they sold at. If there's enough, the level converts to support, as happened here. Here we have buyer's remorse turning support into resistance. People bought, and when the market went lower, a lot of them regret doing so. They tell themselves they're going to get out if they can and break even. So that's converted the level back into resistance. We could see down here, resistance became support. So it's a pretty common, I'm sorry, everybody. Mr. Polk wants to come back on. All right, Mr. Polk, thank you for coming all the way from the great beyond to visit with us. And the floor is yours.
Well, hello there. I was James Polk, and I was the 11th President of the United States. Now, my critics said I was short, thin, and drab in appearance, vain, overly driven, introverted, humorless, aloof, cold, impatient, and lacking in understanding. Now, after I initiated, presided over, winning the Mexican-American War and annexing Texas, which added 1.2 million square miles to our country, might I say, that's about 1/3 of it. And it only cost 13,000 lives. That's about $113 million. Now, that ain't bad for a war. And guess what? That's a lot of land, and they can kiss my whole ass. All 1.2 million square miles of my ass.
All right, that was pretty interesting. Thank you. Here's our healthcare sector, second biggest sector in the market after healthcare. Looks like we broke important support here. Now, when we break a support level, that's when the price is below support, we call that breaking the support. And this is not just some symbolic thing. It tells us that the investors who created the support with their buy orders are out of the way. They fill their orders or they cancel their orders. But when you take demand out of a market, there's a good chance that the sellers will have to push the prices down to get their orders done. So this could go lower. Next level to look at, I think, is 127. 120. Support here, support here, support here. So this is our market memory. A level that is support can remain intact for a long time. Longer than you would think. Here's our financials, really oversold. When a market is at an extreme below what would be its normal or typical trading range, we call that oversold. And that's important because it attracts buyers into the market because they're going to be expecting a reversion to the mean. Here we have support at the level that was resistance. So it's not a coincidence that on Friday, this is where the sell-off stopped, right? Resistance becomes support. Actually, you can start back here. Support becomes resistance. Resistance becomes support. Support becomes resistance. Resistance becomes support. But I would be very careful about getting into any financial stocks because if it comes out that another bank is going under, and in my opinion, I think that's what's going to happen, the sell-off could just continue. All right, Mr. Polk wants to come on here again. I can see he's getting kind of antsy. Maybe he needs to get back to the great beyond. All right, Mr. President, the stage is yours.
That's right, you heard me. 1/3 of it. That is a big fucking piece of land. Based on this alone, I should be considered one of the greatest American presidents ever. What the F? And BTW, which stands for, by the way, you youngsters, I never accepted tens of millions of dollars from countries that hate us like your current president did.
Oh, geez, Jimmy, would you stop with that already?
Here we have our consumer discretionary sector. And once again, we could see, support becomes resistance, resistance became support. Now we broke through. Look for support around 126.50. Industrial sector, resistance stayed intact for a while. Support stayed intact for a while. Market memory, levels that were resistance can be resistance for a while. Now you might be saying like, gee, Mark, why is that the case? Well, think about it. There are people who sold at this resistance. Again, this is an illustration of market psychology. There are people that sold at this resistance that regretted doing so once the price went lower. They tell themselves, oh, gee, if we get back to the level I bought at, I'm going to sell. So it's kind of the same thing, but it's like the mirror image. We have remorseful buyers trying to get out at the same level they bought at so they can get out at break even. Here we have support. Now this is the opposite. There's probably short sellers that sold, and once the market goes against them, they tell themselves, I made a mistake. If it gets back to where I sold short, I'm going to try to buy my shares back so I get out at break even. So also people who probably look at the charts and see, but it's not as common as you think, and that's why you're glad that you're a member of stock market jobber, or you should become one, because we're kind of some of the few that actually look at this. A lot of these technical analysis classes are a waste of money. They're science fiction. I mean, there's very few people out there that are teaching that have the experience that I do. So that's kind of why I'm doing it, because I want to teach people. And I saw a need for someone like myself, and this is my way of giving back. All right, Mr. Polk is coming on again.
I was often referred to as the first dark horse president. I was the last of the Jacksonians to sit in the White House, and I was the last strong president America had until the Civil War. I was born in Mecklenburg County, North Carolina in 1795, and I graduated with honors in 1818 from the University of North Carolina. Let's go Tar Heels. As a young lawyer, I entered politics, served in the Tennessee legislature, and became a friend of Andrew Jackson. Oh, Hickory. And I was a leading contender for the Democratic nomination for vice president in 1844, and both of Martin Van Buren, who had been expected to win the Democratic nomination for president, and Henry Clay, who was to be the Whig nominee, tried to take the expansionist issue out of the campaign by declaring themselves opposed to the annexation of Texas. But they became my bitches, see? And I publicly asserted that Texas should be reannexed and all of the Aragon territory should be reoccupied. You see, that's my boy over there. Yeah, man, what's up? I look like I'm chill, cool, chilling with my boys. Professor Mark seems to think that I'm a douchebag, and let me tell you, you should see the way I beat my women. That's a douchebag for you. I beat my women till they can't stand up no more. That's how cool I am, Mark. Don't come after me, Mark. Sit down. Stay in your lane, bro.
All right, Mr. Polk, thank you once again. Here we go again. Resistance, resistance, support becomes resistance, resistance becomes support. Although it looks like this is breaking down here. But notice how we got that support. Notice how when something gets to support, it makes a quick move higher, or resistance, a quick move lower. This is because investors who want to buy, who created the support, they start to get the sense that there are other buyers around. That's why the price isn't going lower anymore. And they get afraid that they're going to miss buying, so they start to pay higher prices. Other buyers see that and they start to pay higher prices. And it starts a snowball effect. So a lot of times when we get to support, we get a bounce like we did there. At resistance, it's the opposite. Investors who want to sell start to get anxious because they can tell there are other sellers around. That's why the price isn't going higher anymore. And they are afraid that they're not going to be able to sell their shares. So they start lowering their price because the buyers are going to go to whoever has lowest price. If you're trying to sell at $59.85 and there's someone who's willing to sell at $59.70, the buyers are going to go to that person. So once again, we get the snowball effect, right? Sellers undercutting each other. So bouncing off of support is because buyers getting ahead of each other. Selling off resistance is because sellers want to get ahead of each other. Consumer staples was a textbook example of how resistance can convert into support. Actually, I'm sorry. I have that backwards. So support can convert into resistance. Buyer's remorse, people bought, they want out. Support can become resistance. Buyer's remorse, they want out. We can see this on a lot of different charts. We have resistance stayed intact for a while. Resistance here, resistance there. All right, Mr. Polk is starting to get a little anxious, so I'm going to bring him on once more. Or maybe, well, I'll bring him on a few more times because he's worth it. He's one of our unrecognized great presidents. I know he was controversial, but the dude is responsible literally for securing a third of the continental United States by starting a war with Mexico and taking advantage of it. So we could talk about the morality sometime else, but right now we're going to talk about making money. All right, Mr. Polk, up to you.
Former President Andrew Jackson correctly sensed the people's favored expansion and urged the choice of a candidate committed to the nation's manifest destiny, and that just happened to be me. Now, this view prevailed at the Democratic convention, and I was nominated on the 9th ballot.
Who's James Polk?
The Whigs jeered. Democrats replied that I was the candidate who stood for expansion, and screw them, they were right. I linked the Texas issue, popular in the South, with the Oregon question attractive to the North, and also favored acquiring California. Now I was going to kick ass, and they all knew it was coming. Even before I could take office, Congress passed a joint resolution offering an annexation to Texas. This basically guaranteed the possibility of war with Mexico if I wanted it. Now this soon severed diplomatic relations with Mexico, and in my standing on Oregon, I was risking war with Great Britain too. The 1844 Democratic platform claimed that the entire Oregon area, from California boundary northward to the latitude of 5440, which was the southern boundary of Russia and Alaska, extremists proclaimed 5440 or fight. But I was aware of diplomatic realities, and I knew that nothing short of war was likely to get all of Oregon.
All right, pretty amazing. Once again, here's our energy sector, and we can see the same things. Resistance becomes support, support becomes resistance. If you know where these levels are, it is going to make your life so much easier. Why? Because you'll understand how to let the market tell you what to do. If you say, all right, I bought something, it's going higher, I'm going to sell it when it gets to, say, hypothetically 50. Well, you're just guessing. Maybe there's resistance at 47. And if you look at the chart and you say, hey, I bought this thing, it's going higher. I was thinking about selling at 50, but because there's resistance around 47, the market is telling me maybe I should put my order out there lower. So I'm going to put my order at 46.5. It gets to 47, you sold your stock, it reverses, and you're like, yeah, this is great. Now, suppose you were just guessing and you didn't watch the resistance and you wanted to sell it at 50 and it gets up to 47 and reverses. Well, you would have missed it because you were guessing. You didn't understand that there was resistance in the market. So if you let the market tell you what to do, it is going to help you be more profitable. Here's our utility sector. Once again, resistance became support. Support becomes resistance. So it's not a surprise that this is going down because overall interest rates are going higher. Going to bring on Mr. Polk here one more time.
I offered to settle by extending the Canadian boundary along the 49th parallel from the Rockies to the Pacific. And when the British minister declined, I showed him what we did with people down south when they declined our offers, and reasserted the American claim to the entire area. Now finally, the British settled for the 49th parallel, except for the southern tip of Vancouver Island. The treaty was signed in 1846. Acquisition of California proved to be far more difficult, but I still got that done as well. I sent an envoy to Mexico to offer the Mexican government $20 million plus settlement for damages owed to Americans in return for California and New Mexico country. To bring pressure, I sent General Zachary Taylor to the disputed area on the Rio Grande. To Mexican troops, this was aggression, and they attacked Taylor's forces. They drew first blood, and they soon would they would not live to regret attacking Americans on soil that would soon be American soil. God bless America.
Okay, now we're looking at the material sector, and once again, resistance. I mean, I hate to be redundant, but this is how you make money. It's knowing where these levels are. You know, when we get to resistance, we sell off. Get to resistance, sell off. Get to resistance, sell off. We get to support, we bounce. Get to support, we bounce. Support became resistance. Support here, support here. The knowing where the levels are, it's like your roadmap. If you don't know where these important levels are and what you're trading, it's going to be really hard. It's going to be like going into a town you've never been in before, and you don't have a GPS or a map, and you're supposed to drive around and figure out where you're supposed to go. It's going to be pretty hard to do. All right, let's just wrap it up here. Our real estate sector, we can see resistance. These are the R's. Becomes support, resistance, resistance. So here, resistance becomes support. Support becomes resistance. Resistance, resistance becomes support. Support here, and now we broke down below this important support. So this isn't surprising. Most people invest in real estate. These are REITs, REIT, real estate, blah, blah, blah. Anyway, most people that invest in REITs are doing it for the income. So it's not surprising that when rates are going higher in the bond market, people are taking their money out of real estate and putting it into bonds. So this is not a surprising move. There's probably going to be more to continue. Okay, everybody, thank you. I'm going to bring on Mr. Paul one more time, and then I'm going to call it a night, and I will see you soon.
Now, Congress declared war, and I, despite much northern opposition, supported the military operations. Our forces won repeated victories and occupied Mexico City. Finally, in 1848, Mexico ceded New Mexico and California in return for $15 million in our assumption of the damaged claims. I added a vast area to the United States, but I will say that the acquisition precipitated a bitter quarrel between the North and the South over the expansion of slavery that probably started the culmination of the Civil War. I left office with my health undermined from my hard work and diligence, and I died in June of 1849.
All right, well, thank you, sir. I certainly don't have a resume that's nearly as good as yours, but this is me. I'm a stock market jobber, traded for Gabelli and Cohen, two of the best in history. oversaw all kinds of trading strategies as the head of institutional trading at 3 different money managers. Yes, hedge funds, hedge funds, hedge funds. I was a market maker too. I like to play golf, rescue dogs and guinea pigs, and teaching people how to make money. Thank you, everyone. Hope you have a good week, and I will see you soon.